It's Friday, January 15th. This is The Street Live. I'm Catherine Ross, and I am joined, as always, by Jim Cramer. Jim, with earnings beats from two of the banks, Wells Fargo and JP Morgan this morning, how are you approaching stocks which are largely down on Friday?
Well, I think that this is somewhat largely expected that Wells was not good. We have built a little position in Wells. We want to build a bigger position in Wells. We didn't think that that Charlie Scharf would be as negative as he was, but maybe he's just setting us up. He knows the task is huge, but JP Morgan, which we also own, it was flawless, and I really do. I will defend to anyone that it was a flawless quarter, and the stock was up nicely before people looked at the other banks, which were wrong to pull it down, and also because people realized that it's time for some profit taking. So let's be clear that JP Morgan was very, very good, even as Wells was just okay.
And President-elect Biden unveiled a $1.9 trillion stimulus package last night. Yesterday, you told me that you really wanted targeted stimulus. Do you think this package does enough to help out our economy?
The money's going the wrong place. We have two economies. This is that K instead of the V. We have the one economy that's doing incredibly well, and they're getting checks. And then we have the other economy who's just falling off the cliff, and they're getting checks. The checks are not big enough for the people who are falling off the cliff, and they're way too big for the people who are doing well. And so I have to hope that they realize that the people who are disenfranchised in this country, who have lost their job for no fault of their own, are the ones they should be helping. Right now, one of the reasons why the stock market is so good, and I talked to my friend David Tepper about this, is there's just so much money sloshing around. And given the slosh, you know what? Stocks can go higher than when they get the money because the people who are getting it don't need it. It's really wrong.
Jim, yesterday on Mad Money, you noted that new investors have really changed the landscape of the market forever, and not just with their high risk, high reward strategies, which we largely see. This is one of the reasons why you and I have been so focused on Robinhood and Wall Street bets investors. So what do we need to see from companies when they do IPO on this market?
Well, I'm looking at some of the companies now that they are focused on, and I want to make everyone understand. I'm so glad you brought this up. There are a lot of people who say, Jim, why are you wasting your time talking about things like GameStop or Bed Bath & Beyond? Why don't you stay focused on the companies that you know? I mean, like I don't know these companies. And when I look at what's going on, I can tell you, Catherine, it's a brand new market. And you may think that these people don't know anything, but they are the ones who are taking action. 50 to 60% of the regular market is index funds. They don't take any action. But when you see what they're up to, when you see that they're doing a break the shorts move on a stock like GameStop, you better pay attention, because don't you want to make 27% in a day? Don't you want to be up that much in a day? That's what that market's about. So you got to stay focused on what they're doing, as well as, of course, as staying focused on what the fundamentals of the major companies are, because I want to try to make people money wherever I can. Now, a lot of them go in. I mean, Snowflake was incredibly popular among younger people. DoorDash, incredibly popular. So, I mean, it really is kind of amazing. Here's what I'm stuck on. I'm going back and forth while I'm looking here, is that I want to be sure, and of course we'll do this for our exclusive club meeting of Cape after this, but Wells Fargo, by the way, it's below its tangible book. They're going to be buying stock and aggressively, I believe, and then reloading again because their balance sheet's really good. So, but Wells Fargo is not the kind of stock that these people talk about. But I'm glad that you bring it up, because we are on this show going to talk, and you can ask about any Wall Street bet story. I don't share the enthusiasm for BlackBerry at these levels. I understand there's just some good things about it, but we have to talk about what they're doing. They're in charge.
Completely agree with you, Jim. And as Jim mentioned, we will be heading over to our Action Alerts Plus Daily Rundown show over on actionalertsplus.com right after this. But before we go there, Jim, one stock that you own for the club and that you've been preaching for a while about is Apple. This was also your mad dash this morning. In your view, is it actually a good thing that Apple is kind of being kept out of Wall Street's limelight since you preach own it, don't trade it?
Look, there's a guy, I'm looking up where it is, because that's the key to this market. There's a guy, the Goldman Sachs guy, he didn't really like it. He had to raise his price target because business is that good. The theme is that China is buying much more than we thought. Obviously, Mac much better too. Service is going to be great. But the fact that China's sales are really, really good is very inspirational. And I think that those who don't own it yet are getting still one more chance, down 10 from where it was. I think that's a terrific buy.
And Walmart was your stop trading after news broke that e-commerce chief Mark Lore is leaving. What kind of impact do you think that this is really going to have on Walmart's e-commerce side?
All right, this is very rough because Walmart is telling me that the Mark Lore, serial entrepreneur, put in place all the infrastructure you need, and that's true. I mean, it is a real engine. For the numbers for e-com are off the charts, and I think that a lot of that is Mark Lore's doing. But they say, listen, they're fine, left on good terms. You don't need to worry about things. The imprint's been made, and he'll still talk and help. But look, when you lose a guy as important as Mark Lore, and he wants to just go do something entrepreneurial because that's who he is, and I've met him a couple times, and it stings because you know that you're up against Bezos, and you had a guy, Lore, who could be in the room with Bezos. He's that smart. So it is a loss for Action Alerts. We recognize that Walmart had a remarkable quarter, and we're not going to give up on it, obviously. It was up at 150 just the other day. I think Walmart's good, but I would, look, on these videos, I always tell the truth. I wish Mark Lore were not going. I really think he's that good.
Jim, let's circle back to Reddit because I want to talk about one of their favorite stocks, Palantir. It was downgraded by Citi, and the Daily Beast actually reported that CDC officials are urging Biden's team to drop their COVID tracker. So how should investors approach this stock in your eyes?
Well, we know that there's this, Cathie Wood. I don't know her personally, but her fund owned it. That really got things going. I look at Palantir and I say, people don't even know what they do, and they're running this thing. Now, look, there's some people do, and there's always squibs which say, here's what I think about Palantir, but it's up $2 today on Reddit. I mean, it's just being driven by them. And it is like, if you don't understand, if you look, their firepower is directed towards a very small number of stocks. But I don't, Palantir's in their hands. And if you want to play it, you're playing it. Don't forget that. If you want to be there, be my guest. But it's completely controlled by these, by the board, so to speak, as we called them in the 90s. Bed Bath, the buyer that was trying to break the shorts there, is not back today. So that's one we have to watch. GME has finally, it looks like, reached a level where it's too high. I don't appreciate that the company did not call me back. I think that that's bushly.
Jim, this morning, the Wall Street Journal was reporting that a whistleblower complaint was filed against Exxon, alleging that the company overvalued one of its properties. How concerning is this SEC investigation for investors in Exxon?
Well, what I've been thinking is we got to go over what Occidental, which is right there with them, is valuing these things at. Look, anytime you're pressured, it's wrong. But how about if you're pressured because your work is subpar? And the basin's worth more than you think. But then you've got Alpine High and what happened with Apache. And Apache was a company that we lost a lot of money for Action Alerts because we believed that they had lots of oil and it was natural gas. So it's difficult to tell. I've never known. I have not taken stock of Exxon for years and years and years. But it had been coming back when people have been saying that the dividend is safe. I still don't like Exxon with a 7% yield, but I don't necessarily want to condemn the person until I've looked at the facts more.
We talked about Petco yesterday, Jim, but this wasn't the only company that went public yesterday. Poshmark also hit the public markets and closed up 140% in its debut. What do you think is next for this IPO?
Like I'm not a big fan of Real, but this company is now $6.5 billion, and Real. Again, I'm not a fan of Real, but Real is. Bear with me. Real's $2 billion, and I could argue that they should be exactly reversed. It's Real stock has been bid up because of Poshmark, but Poshmark I think is let's say suboptimal versus Real. So people have to start thinking, stop buying these stocks after they've gone up already. What are you doing? Maybe you got stock on the deal and you want to average up. Okay, I'm willing to accept that. But if you're just going in there and buying, there's no reason to do that.
All right, and with that, we are now heading over to our Action Alerts Plus daily rundown show over on actionalertsplus.com. This one, we're going to talk about a lot of earnings. I mean, we've got JP Morgan and we've also got Wells Fargo. We really need to dive into these reports, as Jim mentioned at the top of the show. So we're heading on over there. Thank you, Jim, for a great week. And viewers, thank you for tuning in. I'm Katherine Ross, and we'll see you on Tuesday.